guess some more news out of China in terms of how much more of an AI platform and innovation they're up to, and that's enough to spook the IT services stocks back home.
Thanks, Aisha. So basically, as you would be aware, Anthropic coming up with its plugins. After that, there was this Altruist, which was a wealth tech platform, which basically also got released, and then the China bit which you're mentioning there. So these will have a sentimental negative impact on Indian IT. The question is, if you look at, let's say, an OpenAI or an Anthropic, both of them are planning to go public, right? So they will come up with these plugins almost at regular intervals. Each time they come up with that, I think it will appear another detonant on Indian IT, but I believe that this is going to be much more resilient, but there will be some short-term pain, which obviously we are going through. So that's what my limited submission is. But if I look at it from an overall perspective, at least my view is that you can create softwares, but at the end of the day, you need to implement and customize those softwares, right? So that is where Indian IT comes through, and with those hyperscalers putting in the amount of capex, like earlier 2024, it was 2025, it is almost 400 billion for the top four, is coming to 600 billion, right? At the end of the day, you need to have cloud transformation, data governance, data cleaning, and all of that stuff, where you end up becoming implementation partners for either Databricks or a Snowflake. You will have a significant amount of work. And then there is this legacy modernization, which is also another significant technical debt that comes through, wherein Indian IT is going to play an important role. The overall IT sector as such. So obviously at this point of time, it's sentimentally negative. I'm not saying this is not going to be disrupted at all, but I believe it is being blown a little out of proportion. This is what my view is.
Blown a little out of proportion. Hi, Sushovan, this is Harsh here. So, when I was looking at the numbers this morning, when I was running the numbers, I was looking at the price to earnings multiples, and of course, understandably so, your 1 year forward is now sitting at less than 20 times on both an Infosys as well as a TCS. Now, these are large organizations, and as you said, that they're too large to fail to a certain extent. Do you believe this is a good time to buy at this level, or would you be tentative on that?
I would want to see how these folks go about, right? Like both OpenAI and Anthropic, because if they keep on releasing such disruptive models every alternate day, then it becomes sentimentally negative. Obviously, I would gradually increase my buying in these, but I would possibly start looking at them for sure. Infosys has always been a top class and will continue to be. It's just that these are disruptive times. So, yeah, that's the way I would look at it.